it's kind of interesting. I mean, there you go. I mean, so the techs are doing great, and everybody else is kind of starving. And I think that unfortunately, that may be the the way it works. That may be the way it works here in the near future, which really sucks. But it is what it is. So it's very strange. Just trying to give you an idea of of what's going on. Anyways, so let's get to it. Basically, again, we're seeing a lot of strength in the market, which is amazing. I just wanted to show you this. The market is actually, believe it or not, in a confirmed uptrend. And so, that's that's definitely interesting. As you can see, we're coming above the 40-day moving average here. So you can see that we're definitely doing that, and we may be going up even further. This is a chart of the Nasdaq, and I think that's important to look at because that is the leading index right now. The Spider is doing okay. That's the S&P 500. Dow Jones, not so much. The Russell is moving up a little bit, but we had unemployment numbers yesterday, which were obviously horrendous. So here we are back again, and so some of the stocks are doing great, and some of them, well, not so much. Basically, everybody is crowding into the normal winners. The winners being Apple, Microsoft, Tesla, Netflix, also Amazon, Google, those kind of stocks. Those are doing great. Everybody's moving there. But the market in general is down a little bit today. I just wanted to show you the Spider. The Spider is a 289. Now, it seems to be hitting some resistance, as you can see. It's down about $3 when I took this when I took this slide, and it has moved above the 50-day moving average, but it looks as if it's definitely being affected by the unemployment numbers, and I think there's only going to get worse. So I suspect that next week we may see a little bit of more movement to the upside, but I think we're going to start to see a reversal. Now, for sake of full disclosure, I have three positions. I'm only in 3 stocks right now. Well, I'm in 2 stocks and then options. I did a straddle on Apple this morning, selling 10 contracts. 10 contracts of Apple for the May 1st expiration, and I sold the 290s, and then I also bought the 290-250s, and so if Apple closes above 290-250, I'm doing good, and if not, and if it closes below, well, we'll spend a little bit of money. So not that much, but that's a good way to play earnings, is what they call straddles, and that's what I do typically. I'm expecting hopefully a fairly good number from Apple. I hope it's good. I do think it's going to regain the 300 level, just because where can you go in this market? I mean, Apple has a ton of cash. The new iPhone 5G is going to come out in September, and there's going to be a lot of action there. A lot of people are crowding in. It's a little bit too expensive a stock. That's why I didn't buy it. That's why I bought the options and I sold the options at the same time to limit my risk. Now, the big move yesterday was on Tesla. It just boomed. It just moved right up. Fortunately, I was in it. I was in it on Tuesday. I got in it basically, I think, at a pretty good number. And my number was pretty good. I mean, it was I got in at 779, and it's trading at about 8:30 right now, and that's basically 2 days, 3 days later. But in order to cover my position, and I always do this because I'm always afraid of stocks like Tesla because they're so volatile, I then went in and I sold a call option, a 280 call option, basically where I bought the stock, give or take a few cents. And so that gives me some protection on the downside. And of course, I have the shares to protect me on the upside. So that's how I play these usually on earnings calls. It looks like we have some comments. Wow, that's great. Okay, super. Let's see. I'm going to put this first one up, and they're coming in from Periscope. By the way, I love Periscope. Super curious if I should buy Apple before earnings. It seems to have a cup of L. Absolutely, it does. Here's what I did, just for sake of full disclosure. I did not buy Apple this morning, but what I did is I did a straddle on Apple. I didn't actually buy the underlying stock because I believe that I wanted to limit my risk, but I wanted to be involved with these earnings because I think that they might be very good. Here's what I did, just so you'll know. This morning, as a matter of fact, just a few minutes ago, what I did is I sold 10 call contracts for Apple. These were 290 calls. And I received $7, and let me see how much I got for that. Yeah, I received $7.39 for each of those contracts, and then multiply that, of course, times the number of shares, which is 1,000. So it's about 7,000. I received about 7,000 for that, and then I went in and I bought the strike right above that, which is the 292.50 call. I bought those, and I paid for those. I paid $6.12. Now, if by the end of the week, if Apple closes above 292.50, I'll be in the money and it'll be great. So I'll make some money on that. If it closes below that, then I'll be out some money, definitely, because I sold some calls and I bought some calls. But if it closes below that 292.50, I will lose a little bit of money, probably about $1,000. So hopefully it closes above 292.50. That's the way I typically play earnings. This is a moderately bullish trade. It's not a completely bullish trade. If I wanted to do a completely bullish option trade, what I would do is I would just go in and I'd buy calls, But I don't like to do that because there is you're not hedging it yourself on that, but that's a way that if you were very, very bullish, you could go in and possibly purchase 292.50 call, and that would give you some upside potential. Right now, Apple is selling. Let's see what the price is at the very moment. It is $289. 36. So it's a little bit down. It's a little bit down, and so there you go. So there you go. That's the way you could participate. But I'd be a little bit careful about buying the actual physical shares right before earnings because they can reverse on you, and you have to limit your risk there. So that's what I would do. I would look to see after earnings. If the earnings are good and we have a gap up, that is a good time to buy Apple if you're going long with the shares. Let's see, Raj. Thanks for writing in. Appreciate it. I was looking at December 2018, 20% decline, but it never retested its low before it shot up. Well, you know what? That's true. Sometimes it doesn't retest. But again, I really think it's got to retest. But what do I know? The reason I think so is because the market hasn't really factored in, I don't think, the amount of unemployment that's coming out. I mean, it's horrendous. I have a rental, for instance, in California. I've had this couple in there for 8 years. Okay, 8 years. And they've been paying on time just like clockwork. It hasn't, first time ever they missed. And so, that's what's happening out there, unfortunately. That's what's happening out there. My rentals all in Dallas are strong, but Dallas is a strong market, stronger than California, at least in rentals. So I think there's going to be some pretty big damage in the next little bit, because a lot of people, unfortunately, don't have enough money to cover rent. They don't have 2 months of savings. It's really not a good situation. So I don't think that's fully baked into the market. I do expect that we're going to at least sometimes see a reversal, but there's a lot of liquidity in the market. The Fed has pumped a heck of a lot of money in there. So it's pretty amazing. Also, RJM's wrote in too. Will the 2018 dip bounce and repeat now without retesting as low? I don't think so. But then again, you never can tell. You just can't tell on these things. But that's why you have to hedge. That's really why you have to hedge. Okay, so let's see. We have some. Let's take a look here. I've been ignoring my TikTok people. That's terrible. Are you sticking with the SQQQQ? Well, no, I am currently not in the SQQQ. The reason is because I expect this earnings. Right now we're in earnings season, and some of the tech earnings have been really good. I mean, Tesla's earnings were great. I mean, the stock went up just tremendously. Now we're going to see what happens with Apple. So I don't think SQQQ necessarily would be the thing to be in right now. But let me just check to see how it's trading, because that's really the test, to see what the chart looks like. And the SQQQ is. Let me look at the chart on it. Yeah, it's up today. So so definitely. It's up off a very low number. This may be the beginning of a turn. This may be beginning. I do think we're gonna see. I think the spider is going to bounce. But I'm looking for a bounce at about 300 on the spider. But maybe I'm wrong. I mean, initially, it seems like we're backing off a little bit on the S&P 500. That seems like what's happening. It's a little bit down today. So I don't know if you want to be in the. I don't really know if you want to be in the SQQQ right now. That's just my opinion. I don't think it's necessarily a good time, even though it's moving up. I think it could reverse on you. What do you think of ticker NAT? Okay, let's take a look at NAT. Just for grins, NAT. Oops, NAT. All right, this is Nordic Tanker. Okay. Yeah. Look at that, 621. You know what? I think that I want to show you. I want to show you something on not on the IBT 10, but I want to show you a stock that and this is on the Periscope feed and also the YouTube feed. I want to show you a stock that the funds are buying, and I can't figure out why, but that's how it is. It's called International Seaways, INSW. So if you're interested in tankers, you might want to look at this one, INSW, and it's up today. It's got good earnings, INSW, and let me just take a quick look at the chart on it. Now, for some reason, a lot of the funds seem to be accumulating this particular stock. I don't know a lot about it. It's trading right now at 24.64. And let's look at the options on it. The May 15th contract is very strong at $2.15 for a 25 strike price. So instead of the Nordic tanker, you might want to look at this one, INSW. Just a thought, because I think it's stronger than the Nordic tanker. Hey man, thanks for thanks for being a fan. I love it. I love fans. What do you think of Apple long play? You know what? I just entered an Apple trade today because I just think Apple is just one of those stocks. It's like you can't keep it down. It's like I don't know. It defines our time. I have an iPhone. A lot of other people have iPhones too, and it has a whole ecosystem. I don't necessarily agree with everything that they do, but man, they've got a ton of cash. They're sort of driving the market. I mean, the stay-at-home market hasn't affected them hardly at all. Um, I think long term it's an over $300 stock. I really do. So that's the reason I didn't. The way I play earnings typically is I do these straddles. So I don't actually buy the stock. What I do is I sell call options typically right in the money, and then I buy call. Then I sell call options right out of the money. You say, why would you do that? Well, the reason I do that is because if I can get a movement above the where I bought the calls above out of the money, then I can do quite well in terms of in terms of a gain. Now, here's the thing: when you're selling calls, you get a credit. So that's what I did. I sold 10 contracts this morning, 290s. These are for expiration on the 1st of May, which is Friday, and then I bought ones that were just out of the money, just right up. They're the 292.50s, and then of course, there was a positive credit to my account. Now, of course, I can't access that until the expiration date. But if Apple closes above 292.50, I'll do quite well in this. And if it closes below 290, well, I will have put out a little bit of money that I didn't want to do, that I didn't want to put out. But that's a way that you can play earnings. And I really, really do think that that truly truly Apple is one of the greatest stocks of my lifetime. It's just amazing in terms of its in terms of what it can do. So just wanted to say I think a long on Apple is very smart. To be honest, I don't think, but I would wait to go long on it. What I would do is I would wait until after earnings, because it's gonna it's gonna settle a little bit more, and you're just gonna risk less that way. So, anyways, that's the thing. Tech has been on fire. Absolutely. Well, it's the part of the economy. The stock market is a what they call a forward-looking indicator, in that it looks at where we're going, and well, it looks like we're going digital. I mean, no big surprise there. I mean, look at what Facebook did. I mean, it was down. Now, I believe Facebook is going to move above 210. It's been down below that significantly, but the earnings were even though the ad revenues were down for Facebook's looking really good. So that's another one that you might want to look. What's happening is there's a lot of crowding into these marquee tech stocks by a lot of people and a lot of the funds, and they're looking for safety. And they're looking for the stocks that are going to hold up after some of these numbers come out with the unemployment. And of course, we didn't have great unemployment numbers on Thursday, as expected. And I don't think, at least for this next quarter, the numbers are going to be very good. Hopefully, they'll regain some strength by the end of the year. I have a feeling they will. And the reason I do is because that's an election year. And typically, from my experience anyways, election year, the party in power in election years tries to make the situation as good as possible. So I think that we're very likely to have fairly good numbers towards the end of the year. I mean, after we get past this coronavirus thing. So I who knows? But I do think we're going to retest, and I think the retest of the market is coming, and I think that's coming soon. And I believe that this next quarter we will see a lot of downward pressure in the S&P. But right now we're moving higher, and that's definitely confirmed. What percent of the market is retail? This is a really good question. You know what? Here's the thing. Most of the market is not retail investors. You say, well, wow, how is that possible? Well, most of it's institution. And this is why I concentrate so much on what, let me pull this chart up, on what the funds are buying. Because in my experience as an investor, I have done extremely well when I buy stocks that other funds are buying. I kind of am like a little minnow that follows along with the sharks. I'm just a small guy, and I'm looking around, I'm seeing what they're eating, and I'm kind of go over there, and that's how I do it. I don't try to move against the current because I'm too small. I'm just a little guy. Retail investors normally get killed because what will happen is that the big funds will move out of things. They'll say everything is great, and then they'll be selling. And then, yeah, I would say that at least 70, more like 80% of the market are funds. So what they're buying is very, very important. Now, earlier, we had somebody come in and wanted to find out about Nordic American Tankers, NAT. Well, and I was trying to suggest possibly you might want to look at INSW, which is International Seaways, which is a little bit different company. Why do I like this company? Well, very simply, because the funds are buying it, and it's up, and it's $24. There are 290 funds that are in this. It's amazing. It's got some of the biggest ownership. What do? I don't know, but they seem to be doing great. So I always look to see what the big funds are buying, and then that's where I look. Now, why do the tech, the Apples and the Microsofts of the world do so well? Well, part of the reason they do so well is because in these ETFs, these exchange-traded funds, the tech ones, the ones like the QQQ, they hold these stocks, and they hold them, by the weighted average in the index. So if you have a stock like like an Amazon, it's very heavy weighted in the index. So therefore, all these funds have to buy it. So it kind of pushes it higher. So that's also what I look for as well in things. But retail investors are the minority of the market. People like me are the minority. We are the little guys that kind of go, look to see where the big whales are, and we kind of follow along, with them. I don't try to swim against the current because I'm not strong enough, and most retail investors aren't. I'm looking to see, what's going to move most in the shortest period of time. I'm a trend trader, and that's really essentially kind of the way I trade the market. I care more about the volatility than I can make money in the volatility going up or going down, but I'm always trying to go with the trend. And that's the thing. As a retail investor, you're going to be at a disadvantage, obviously, to the big investors in terms of size, but you're going to have an advantage in terms of direction because I can turn on a dime. I can go, and as I did, like, at the end of February, when the market was turning against it, there was a signal. I tried to signal to everybody, go all cash. Well, I was able to do go all cash in literally 30 minutes. I was able to get out all my positions. That's not the case for a lot of these big funds. They can't do that. So as a retail investor, even though you're smaller in the market, you have an advantage, and that is agility. So just remember that. And don't, investors are almost always stuck holding the bag. Unfortunately, there's a lot of bag. And the funds love to hand it to the people. For instance, just recently, before this big downturn, there was big fanfare. Warren Buffett buys 10% of Delta Airlines. Well, guess what? 2 weeks later, he filed to sell it, but he didn't tell it. But there was no big fanfare like that. So everybody thought, well, gosh, it's safe to get in the water. I'm going to buy some Delta Airlines. It's great because Warren Buffett's doing it, right? Well, guess what? He did do it, but then he realized the error of his ways, and he quietly sold 10% of it, leaving a lot of people to hold back. So you got to kind of watch where the funds are moving. What are they moving into? What are they moving out of? And right now in the market, the funds are moving into tech. It's just a fact. They're moving into tech because it's considered a safe haven. I don't know if it is or not, but it's considered a safe haven. And the big cap techs, not the small ones. I'm talking the Apples, the Microsofts, the Googles, those kind of stocks. That's the safe haven right now. So that's where the money's moving. Where is it moving out of? Well, it's moving out of the hotels. That's why I kept getting. A lot of people were interested in buying Carnival Cruises. Great company, but I wouldn't buy them right now because everybody is selling them and the money is moving out of there. So that's the thing. A lot of people that went in and tried to buy. This is one of the major reasons why you try not to buy cheaper stocks, because usually they're cheap for a reason. And the reason is people are selling them. So that's the reason why you want to buy high and sell higher. I know it's counterintuitive. I mean, we're taught our whole lives basically to buy bargains and then let them appreciate. And in the real estate business, which I'm also in, that makes sense. You buy things that are, you're like, wow, this is great. This is a good property. People are moving to this town, and the prices are low. Well, that's a buy low, sell high thing. That's a long-term hold. That's how you trade in real estate. But it's not how you trade in the stock market. In the stock market, the best way is to find things that people are moving into and buy that at a high price and then sell as more people come in before everybody gets out. So it's a little bit different philosophy in terms of the way you handle it. Anyways, so cool that okay, let's see. Okay. Oh, wait a minute. What is your favorite part about stocks? Well, the favorite thing I like about stocks is, as a small guy, and I am the epitome of a micro business. I mean, I do contract with people, but there's really not a whole lot to it. I'm a micro business. What I like about it is that I can participate in the very best of the best companies. I can buy a share in an Apple or in a Microsoft, which, I mean, in my dream life, I'm Bill Gates or I'm Mark Zuckerberg, but in reality, I'm not. But I can buy a little piece of it, and maybe it'll go up, and maybe I'll make money on it. So that's what I love about the stock market. It's very, very liquid. I can go in, and I've done this. I've done this week after week, month after month. I can go in and look at the market and see what the directions are, and I can make several grand easily. And I'm not any great trader. I mean, there are traders that make a lot more than I do, a lot more than I do. But I can just go in there and it's practically like a job. I mean, I don't really have to have a job. I can just go and look at the market and then know to put some trades on. I'm going to lose on some of the trades, absolutely. But you know what? If you learn some things about this, you can actually make money in trades. So even like when the market was going down just recently, when we had the big, the coronavirus came and we had the liquidity, I was shorting the spider, and it really worked well for me. I mean, I made 1 week I made about $8,000 just shorting the spider, and everyone is freaking out. But why? Because I'm looking at the trend. That's what I'm trying to show everybody here, because I'm not special in any way. I mean, I've been trading about 15, 20 years, but I'm not special. I just use off-the-shelf stuff. I use the Investor Business Daily to look at trend. I look at everything that everyone else can look at, and I just know certain trades that work at certain times. So that's the thing I'm just trying to put out there. That's why I like the stock market, because it's sort of like, if I have a little bit of capital, I can just go and now, of course, I have losses all the time. But here's the thing, and this is what I kind of preach to everyone. I always cut my losses short. I always do. I don't let losses run. I have a absolute rule that if anything position that I get in goes down 7%, boom, I'm out. And it's painful sometimes. You're looking at you're entering these stocks and they go down, and you're like you're out, and you're like, wow, I'm really stupid here. I've really made a mistake. But you know what? That's set me in good stead, because if you limit your losses in the stock market, if you buy leaders and you limit your losses, more than likely you're going to make money. I certainly have. So there you go. Is oil a good stock to get into? No. And I'll tell you why not. And I know this is very hard. I mean, I also have some interest in, believe it or not, in the oil patch. My brother and I, we own some mineral rights out in West Texas. And before they were doing great. When oil was $100 a gallon, it was like Yahoo, giddy up. Now I don't think I could lease my property. Oil is just too it's too hard to play right now. Oil used to be like 20% of the S&P 500. I don't think it's 3% now. I'm not exactly sure of the number, but it's not good. I mean, I think that, there are great companies out there like Exxon and Chevron, and these companies pay dividends. And if you're a dividend player, maybe it's a good thing to do. But I don't think it's the future long term, at least not right now, at least not in the short term. Right now, that's the thing about the oil market. The oil market goes in these cycles of boom and bust. And that's why right now, I think it's really tough to be in oil, because right now the oil sector in general is being disinvested. What do I mean by that? Well, remember I was talking about the big funds, how they operate. Well, for years, the big funds loved the oil because you could go in it was going up. It was always going up. Boom, 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 boom. It always kept going up. So investing in oil was a really no-brainer, and that's what the big funds did. Now, the price of oil, at least crude oil, is less than $20 a gallon, $20 a barrel. Sorry, not a gallon. It's 55 gallons in a barrel. And so what's happening? Well, what's happening is that people just aren't investing in it right now. The funds are pulling their money, and that's really what you have to look. It's not, is oil a good or a bad investment? You have to look at, where is the big money going? That's the more important question to ask. Is this thing better than that thing? Is tech better than oil? That's not the question you should be asking. The question you should be asking is, where is the big money moving in the market? And right now, the big money in the market is moving into big tech. So that's why it's so good. That's why it's so good. It's not because tech is any necessarily intrinsically any better than oil or industrials. It isn't. It's just that the market is saying, the market is moving into those areas. And the way you make money in the stock market, at least I have, is by buying high, something that's relatively high, and then selling it higher. Okay. How can you do that? Well, you can do that if money is moving into that particular thing. So right now, because of the coronavirus and also because of the way that the economy is changing, Amazon is doing great because everybody's ordering everything online. I know I order from Amazon. And so Amazon stock is incredibly expensive. You look at it, you go, wow, that's a lot of money. Like, over $2,000 for a share. That's way, way high. But because everybody is moving into that, it's probably going to move higher. I mean, I can't guarantee it, but it's probably going to move higher. So that's kind of my little spiel about, is oil good or bad? Well, it's not good or bad. It's just that money is not. Is oil a good stock to get into? Okay, well, let me take a look at oil. I mean, I wouldn't be in oils right now, just because I don't think. Yeah. Okay. Okay. Okay, this is Barclays. Underlying 2.6. This chart doesn't look that good to me. No, this is a terrible chart. This is OIL. No, this is a terrible chart. No. You don't want to be. This is a terrible chart. Let me see if I can show you the chart of this. And I think this is really instructive, because hopefully I can pull this up on the screen here. Let me see if I can do it. And I kind of want to show you. Well, that's a pretty picture, isn't it? Let me move back to my to over here, so you don't have to look at the robin's eggs on my link. There we go. Come on, baby. There we go. All right. And there I am. There's my mug here. So I'm going to try to pull up this stock, OIL. Well, the thing about this is, oops, it just doesn't want to be nice to me today. So anyways, there we go. So I don't think this is good stock to get into, to be honest. What's your take? Oops. Ooh, sorry about that. Okay. eBay, it beats on all levels and the stock still is down after hours. I think it's up a little bit. Why? Well, because the big money for some reason doesn't like eBay. They like Shopify better. Why is that? I don't know. But I can tell you that I can tell you that eBay probably is an acquisition eventually. Let's see if I can get eBay up here on the screen. Putting that up. Yeah, it's kind of slow. I think eBay may be an acquisition. Just to be fair. Okay. How do you find fun? How do you find where the funds are buying? Well, here's how I do it. Here's how I do it. I use the Investor Business Daily. And let me show you just really quickly a list. Now, you can see this list on my YouTube channel, which, by the way, is and I put it up right now. It's basically youtube.com/c/Dallas Trading Floor, and then I'll show you that. But this is currently what a lot of the funds are buying. At the top of the list is this INSW. This is the International Seaways. Also, COLL. This is a pharmaceutical company. It's doing quite well. There's another one called Z Labs, ZLAB. And then this is the one I particularly like. I'm very interested. It's a Swiss company called CRISPR Technologies, CRSP. There are 255 funds that are in this right now. Also, Switch, SWCH, Swatch, which is, I don't know why they're doing so well, because I don't see any reason why people are buying their watches. And then it goes down the list. Most of these stocks right now that the funds are accumulating in terms of numbers seem to be in the pharma area, which just doesn't surprise me because there's a lot of biotech. There's a lot of choices, but that's how I find them. I use Investor Business Daily, and I use their information in order for me to figure out which ones are there, and then I look at those individual and then I look at those individual stocks to see if they have the right characteristics, because it's not just enough that they're being acquired. You want to make sure that there are they have the right characteristics. So let me look at this OIL, and I think I have it up on the screen here. Oh, there we go, OIL. See if I get a chart there for you. Hold on one second. Okay. Oh, there we go. Oh, market trend. Well, so much for that. I'm trying to I'll show you at least I can show you the market trend. Okay. eBay. Yeah. Can you tell us about a bad trade that you made and what you learned from it? Absolutely. Last week I last week I bought I bought Zoom, okay? Thinking, wow, that's Zoom is great. Everybody's using Zoom. It's super duper. And I thought I was going to make some money with it. And sure enough, I mean, I bought it as it was moving up. Well, guess what? I also sold a call on it just to sort of hedge my position. But with Zoom, I thought, well, gosh, I didn't do the full research, okay? Because I thought, wow, this Zoom is moving fast. Everybody's using it. Everybody's talking about it. It's the greatest thing since sliced bread. It was selling at about, I think 150 when I bought it. So all of a sudden, I bought 100 shares, and then I immediately sold a call. I sell the call because that gives me some downside protection. But then literally within 30 minutes, Facebook came out and said, look, we have something that's more secure than Zoom, because that's Zoom's Achilles heel, is that it's really super easy to use, but it has this issue with it has this issue with the security, and Facebook had solved that. So all of a sudden, Facebook comes out, they announce, and Zoom just takes it on the chin, and of course, it goes way down. Now, fortunately, I had hedged my position by selling a covered call, which appreciated. So I ended up losing about 5% on that trade, and that was within 45 minutes, and that was basically last week. So yeah, I do lose, but most of the time I win because I hedge my bets. What to buy? TGen. Okay, what do you think of Facebook? I think Facebook is a great stock, and you know what? I think Facebook is a great stock, and I should have been in it before the earnings. It just moved tremendously. Let me see how Facebook's doing today. I think Facebook is absolute winner long term. I was around the beginning of the year. I was in Facebook in the 220 and the 215 208 level. It's currently trading below that. It's 204. It's moving down a little bit today. I do believe that long term Facebook is 220. I would say at least in that, maybe more. Let me see if I can put I can put Facebook's chart up here. Let's see if I can get that up. That's market trend. Let's see if I can go here. Give me that. No, it's not going to let me. Oh, it just won't let me. It won't let me do that. Oh, goodness gracious. Yeah, this is. I've got to get a faster connection because this just doesn't let me move around there. If there's a way I could get it directly, but anyways, I can't. So there you go. So I'll go back to this view here. So I do think that Facebook is excellent, and I do think, or do you think? I do believe it's going to dip. I think it may retrace a little bit, but I do believe the original buy point on Facebook where I bought it, and this was before I sold it, was 208. That is the buy point on Facebook. Now it's getting very close to that buy point. It was actually at that buy point today, and it moved back. If Facebook closes above 208, I believe that you might be very wise and possibly moving into Facebook. I think because I think it will move higher. Can you say this 100% of the time? No, but let me see if I can put up the chart here for Facebook. Yep, there we go. Okay, Facebook. Let's see if we can get the chart. There we go. All right. I'm having some technical issues on my bandwidth. Unfortunately, I don't have enough bandwidth here. But hopefully I will be back at actually the location, my main office here, by Friday. That I'm hoping tomorrow that I'm going to be able to move back. They're going to possibly let us back in the building tomorrow. That's what I'm hoping. Let's see. Let's put up the Facebook chart here. Let me just put that up real quick, and that gives you. Yep, there we go. All right. Well, finally working. It's finally working. So there we go. This is Facebook. It's, as you can see, it's moving really, really nicely. 203. I think we're going to see it, possibly. And there's the chart. This is of course, the 50-day moving average. It's way above that. The buy point. What I mean by that is there is a buy point on Facebook, which is basically, let's see. I don't know if you can see it here, but right before the downturn, it got as high as about two. It got as high up, but as you can see, where it moved beyond the 50-day moving average right here, it's about 208, and this is approximately where Facebook is. So if it closes above 208, I think you're looking at a very strong potential uptrend, at least in the near term, for Facebook. So I just wanted to show you that Facebook chart because I think it's so good. And I think, I don't know if it's going to dip, but I would definitely buy it if it moved over. Now, and this is a really hard thing to learn too. Everybody says out there in CNBC land, buy on the dips. Hey, it's a good idea. Buy on the dips. I don't like to buy on the dips. And the reason I don't like to buy on the dips is because sometimes the dips have a way of continuing on down. So you're not really necessarily buying a bargain sometimes. I like to buy when the buy point has been exceeded. Okay. Now, what is the buy point? Well, the buy point, there's a technical, is a technical pivot point that you see on stocks that's based on chart patterns. And one of the most auspicious chart patterns, of course, is the cup and handle. Facebook doesn't have necessarily a cup and handle right now, but it has a very good chart. As you can see, it's moving the right direction. Okay, this is what you want to see. When a stock is moving upwards, that means the trend is upward. So you have a better chance of buying it at that it's going to go higher. That's what I'm talking about. If you're buying on the dips, it's reversed its trend and it's moving down, and it can continue down. That's exactly what happened here. You know, it was good to buy, and then as it reversed its trend here, see, people that said buy on the dips, well, they did. They bought on the dips, and then guess what? It went all the way down. So I don't like to buy in a downward momentum. I like to buy it in an upward momentum. That's why Facebook potentially right now is a good buy, and they had terrific earnings. Now look, they were up. They've been up over. They were up over 5% yesterday, and they're up 5% today. That is a stellar number. That is a stellar number. They're probably going to be up above 210. I mean, who knows? But next week, I think you're going to find that there's going to be a lot of people that want to move into the stock. Remember, what I'm trying to say is that this is how it works. When a stock is like Facebook, a lot of people want to earn it because they're looking and they're like, wow, their business is good. Their business is going to grow, even in this terrible environment. So there's pressure to get into the stock. This is why this stock is moving up. So if you were to buy it potentially now, and then wait maybe a month or two, I suspect that it's probably going to go higher. Now you can also do this with buying calls as well if you don't want to buy the underlying stock. That's another way to do it. But right now, at least right now, the numbers for Facebook are very bullish, and a lot of the big funds are getting into Facebook. They're increasing their positions, and so that's kind of where you want to be. Remember, you're just a little minnow like me, and you're following along about these whales, and you look to see where the whales are going. Well, the whales right now are going to companies like Facebook, and they're buying them, and that's why it's pushing it higher. The reason it's pushing it higher is because the people that already own the stock, Facebook stock, aren't willing to sell at cheap prices. They're saying, well, if you want Facebook, I'll sell it to you, but you got to pay. You got to pay more. And as you can see, that's the case. You have a lot of strong holders of Facebook right now. The people that own Facebook now, they don't want to sell. They're like, well, I don't want to sell. It's going higher. So that's pushing the price higher. Now, when we get to a certain level, when we get beyond, when we get up there, then maybe it'll change. But right now, the pressure, you have a lot of buying pressure. Take a look at this. 115% change in volume. It's up 5%. This is in a day. This stock is going higher. I mean, it just is. I mean, say what you will. I mean, you might not like Mark Zuckerberg. A lot of people don't like him, but his stock's doing really great. So that's just something to think about. Anyways, okay. Oh, wait a minute. I got some comments here. Let's look. I'm getting used to this, all these things that I'm trying to do. Oh, wow, great. Oh, man, this is excellent. Okay, let's see. Market Trader always has good stuff to say. So let's see what is happening there. Okay, great. After a week, the majority of the SMU, after this week, the majority of SMU will report earnings. Wonder when the pump will come next week. Great question. This is the reason why I am dealing with options primarily that are closing tomorrow on Friday. The only position that I have long, and it's not even that long. It's 1 week. Is I bought a position. I bought 100 shares of Microsoft this morning, and I sold a call practically at the money, basically out a week. I mean, that's as long term as I'm going. So I think you're right. I think the pump is coming. When what's going to happen is that there's there's going to be a lot of shortfall. A lot of people are not going to have money in their pockets. It's going to be hard, and I think there's going to be more pump. There's going to be more of this PPP and more of this paycheck protection and all these other schemes that are going to come. So I think that's coming, but I do think I do think that we may not be there. We may not be as strong after the earnings, and that's a very good call, by the way. I really appreciate your insight, because I do believe that we're going to see the peak here, and then probably next week we're going to see some weakness. So that's why I'm keeping my trades very, very short, and in terms of duration, and I'm also using a lot of options. Okay, let's see. Okay, let's see. Jim, will Tesla touch 360 again? Well, your guess is as good as mine. I think it will, but I don't think it's going to do that now. And here's why. I do believe it will, but I think we may have to wait. We may have to wait a year or two for it to get back down to 360. Right now, Tesla, like it or not, is really the only game in town when it comes to electric vehicles. Yes, it's true that other companies build electric vehicles, but not like Tesla. So I'm gonna put up the Tesla chart here. Hopefully, here we go. Hopefully I can get it to work. A little bit of problem with my bandwidth. There we go. Market trend. Okay, and let's GSLA. And for sake of full disclosure, I do currently have a position in Tesla. Breaking news. Sorry about that. It doesn't like my big cursor here. It doesn't seem to. This is Microsoft Edge, and I'm afraid I'm going to have to go to a lighter weight browser here, because I just can't seem to get it to obey. But anyways, so I can't seem to get it to obey. So let's see if we can get a price here on Tesla. There we go. I got the cursor now. TSLA. Okay. There we go. So now let's see if it brings up the chart for Tesla here. And it's processing your request. Okay. So sorry about the wait here. Let's see. I'm going to move it to the next question. And okay. I don't know if you here's the thing about Tesla. I don't think you've missed Tesla. I do think it's moving into a different trading range, and the reason I do think I've been trading Tesla for about 6 months. I've done quite well. It's by far my number one in terms of stocks, in terms of what I've been making money on it. It's trading above 800. That was a very important number for Tesla. There is resistance at about 800, and I do believe that it's going to move in a trading range from about 800 up to about maybe as high as 880, 900. I'm not exactly sure. I'm going to do some analysis this weekend, but I'm not exactly sure on the trading range. Yeah, okay, there you go. As you can see, there we go. Okay, as you can see, the blue arrow at the very left of the very right hand side, it's moved up almost to 900. It's back down again. I believe that is going to be the trading range, and here's the reason why. If you can see this, and it's probably hard to see online here, but if you can see this prior to it coming through this downturn, 800 was about the resistance level. Okay, this is where when it came up here, it came up. It hit resistance here at 800. I believe that 800 was the resistance before yesterday. Okay, I believe it's moved past the resistance, as you can see by this bar here. So I do believe the trading range is now going to be from about 800 up to maybe about 925. Okay, as you can see, this is the high that it made before, and then there was a blow off top and all that. The high is actually 968. But I do believe the trading range now for Tesla, at least for the near future, is going to be from about 800, well, about 780 or so on up to about 925. So that's kind of where you want to be in it, I believe. I believe you want to be in Tesla. So that's that's kind of the deal there. All right. And thanks again, Market Trader. I really like your comments, because I think you're right. I think you're spot on. I think we're going to see. I've been saying this for about a week and a half here, and I seem like I'm getting it too late. But I do believe we're going to see a retest, and I think it's going to happen with these numbers that are going to come out regarding the retail sales, and also just the terrible situation that a lot of people are in regarding their cash. I mean, I don't know if you know this, but the credit card companies are cutting back on credit lines, and there's all kinds of shenanigans going on. So I don't think the next week is gonna be as good, but we got to wait and get through earnings season. And I think once we get through earnings season, then we're in a situation where we're gonna move probably down. If you're setting a 7% stop loss, what kind do you set? Oh, very good question. Trailing our market, and manually. Here's what I do. When I first buy a stock, let's say I buy a stock, it's $100. I always set a market order. Okay, and why do I do this? Well, I had this situation happen to me with Zoom last week. I was buying Zoom. It was moving up very quickly. I didn't really do my research. I just got a little greedy, and I was spanked for it. So I bought some Zoom, but I immediately put a 7% stop loss on it, and then I sold a call. Well, it so happened that I put a market stop loss on it, and that was a good thing, because what happened was the stock reversed on me tremendously. And when it reversed on me, it went down, and it went down like 10% in a matter of minutes. But because I had a market stop loss, I got a bid on my sale very close to the 7%. I could have lost, if I had a trailing stop loss, I probably would have lost 10 or 15% instead of 7. So when I first buy a stock, I do like to do the market the market limit, where if it hits it, it just puts it up for sale, and whatever the next bid is, that's what it does. The trailing loss can be good if you're in a stock for a longer period of time. Now, if the stock is moving up, if, for instance, you bought it at 100 and it's moved nicely up to say 110 or 115, that's when you want to consider a trailing stop loss, because that will protect some of the profit. But what I usually do with that is I just move my market stop loss up, and I don't accept any. That's how I do it. So I do like the market stop loss better, and that's a very good question. I so appreciate it. Well, I have wasted another hour of your good time, and but I do appreciate you coming by and taking a look here. I'm going to be on tomorrow, of course, Friday. Hopefully, I'm going to be back at Dallas Trading Floor. That would be great. Hopefully they'll let us here and come back to my office. That would be really, really great. But again, thanks to everybody. Thanks to everybody here. I so appreciate you taking a look. By the way, I do charts and stuff like that. You can see them if I'm on my YouTube channel, youtube.com/C Dallas Trading Floor, or I do broadcast on Periscope too, because I really like Periscope. I think it's easy to use, and it's really well written. And that's pscp.tv/Dallas Trading Floor. And also, I am on Twitter, and also I'm starting a Facebook group for Dallas Trading Floor to sort of maybe hints and suggestions on on pestically good trades. And then I also am creating an alert, an alert so that trades that I'm making, maybe I can share with other people. And that is, to get on that list, it's just www.dallastradingfloor.com. So again, thanks to everybody for coming by and seeing me. So appreciate it. And have a great day. And I'll see you tomorrow. Bye-bye. And for everybody on YouTube and on Periscope, thanks for seeing me. So appreciate your comments, and I hopefully I can share some good trades with you. Maybe you can share some good trades with me. I'm always looking for good trades.